We are our own potters, for our habits make us and we make our habits. Frederick Langbridge. And my friends, each and every day, 10 to 15 minutes, make it your habit. If you want to be a trader, you want to be an investor, you want to be a chartist, someone who has technical analysis skills, going to take work each and every day. Let's jump into these charts. This is a day where everything is down. The big downer for the day appears to be, yes, it is the NASDAQ 100 down 2.75%. Now let's switch over from that long-term chart that we've been looking at back to the 5-day that I originally started off with. I want to tell you where we are on probabilities on all 5 of the charts that we follow: S&P, NASDAQ 100, 20-year U.S. government bonds, gold, and Bitcoin. And I'll tell you as we start that our 2 standouts are gold and TLT for the highest probability moves. Now, let's go through these charts. I'll explain to you as we are going through them. S&P 500 going into the second week of down movement. We can see 1, 2, 3, 4, 5 down candles on that 2-day chart. 9 days right now. If there's a move down tomorrow, we're already almost up to half. We're well over half of the volume up to this average volume line, as again, markets just are accelerating volume-wise in their down movement, at least the S&P is. We can see a couple of bumps where the market's tried to catch its breath and then falls back over. We had one of those yesterday and then down again today. Where does that leave us? Look at all the volume for this week and the down movement. Well, currently, if we look at the 5-day, going from the 20-day that we've been looking at so much of this week to the 5-day chart, we see that the probability of a short is right at 60%. Our support level, we're currently at 572. Our support level is 549.34. Resistance is 577. Our aggressive entry is right where we are now. The strict entry is going to be the market pulling back and hitting another level, that is the resistance level, and coming off of that. Expected down move there would be 20 to 25%. That is a risk to reward ratio of 1 to 2. And the accuracy check on the strict is right at about 70%. So if indeed you see the market bump up and stop at that level of 577.62 and then start to move down again, you got really good probabilities on the back test of that moving. Now, will it do that? Well, that's about a 60% chance that it will do it. So we'll wait. We'll see if the market does, say, bump up on Friday morning and then hit that stopping point around the 577 mark and start to move back down again. That might be when you consider pulling the trigger on a practice trade on the S&P. Now let's look at the Qs. Now that's what was really strongly down today. And again, look at all the volume on the weekly. Look at all the volume on the 2-day. Look at all the volume on the half-day. Remember, we bumped up yesterday and then dropped over the abyss again today. And again, the Qs hammering down the tech stocks. Right now, the probability of a continued over the next 5 days is about 55%. We see support. We're currently at 488.20. And again, these are the after-hour numbers here showing you what's happening after hours as I record the show on the left side of the screen. But where we closed, 488.20. And we see that our support is at 481.58. Our resistance is at 503.14. The aggressive entry would be around where we are now. The strict entry would be, again, if things lifted up, got up to the 495 mark, and then started to plunge back down again. Remember, we're at the 488.20 right now. So if it pops up to that level of 495.72, and then appears to be moving back over, we're looking at, an expected down move of somewhere in the neighborhood of $10 to $15. That's a 1-to-1 risk to reward ratio. And when we look at the strict entry point, we did our back test accuracy. at 65%. So again, keep your eye on things. If you see things pop up and set up for that down move, now it may not do that. That's what I keep telling you guys. We give you the percentage possibilities. We tell you what the back test shows. Doesn't mean it's going to do that. But if it does do that and does hit and then starts to move in the right direction here down, we're telling you how often that has worked in the past when it's done that. So again, you're preloaded with those support resistance levels. And when you see that happening, you can then jump in and pull the trigger on that move. Now, for those of you who are listening that are subscribers at chartingwealth.com for free, you don't have to write these numbers down. Remember, we put up the trade execution summary grid every day at Charting Wealth. You get it in your email. So if you go there and sign up at chartingwealth.com, put in your name, email address. We don't spam or sell that list. Doesn't cost you anything. We will send you the email every day, and it has that grid in it. If you just go to the website, that grid is not posted. You can still listen to the videos. You can watch the videos. You can read the verbiage that we put in there, but you don't get that grid. So go ahead and sign up. Doesn't cost you anything, and we email it to you as soon as we finish the review and get it up. That is where we are on the NASDAQ. Let's go from stocks to bonds. Bonds pulling back just a little bit. It was a little smallest downer for the day, 0.33%. Now, where are we on bonds? Well, this is interesting because this is one of our standout potential charts. TLT, we give it an A for standout in probability. It's a around 70 to 65% move in the long direction. It is a strong back test of 75 to 80%. It's got lower volatility, and it makes it an ideal potential 5-day plus trade in an off-risk environment. So check it out as we look at it. Now, again, we can see we've had, 2.5 days of down movement. We're sitting right there on the trend line on the half-day chart, barely pushing through it on the 2-day. So pay attention to what happens tomorrow. Here's the numbers that you need to know. And again, they'll be in your email. 89.70 is the support level. We're currently at 90.40, okay? The resistance is at 93.34. Aggressive entry would be right about where we are now at 90.39. The strict entry would be if indeed the price bumps up to around 91.48. And again, if you see that happen, the expected move is between $2 and $3 over the next 4 to 5 days. Again, for the aggressive entry, it's about a 70% back test accuracy. And for the strict entry, it's 75%. And overall, the probability of things going long, that is the price going up on TLT, is around 65%. So again, I love it up around 75, 80, but we don't always get that. But because of the high probability in the back test, the low volatility, and the 5-day time frame that we're looking at, that is one of our more comfortable recommendations for you to practice trade. Now, again, I say practice trade because we're not a stock calling service. We're an education firm. You don't pay us to give market advice. We don't give market advice, but we would like you to practice and learn by doing. Let's move on to gold. Gold is another one and it's our A+ rating as far as stand out for high probability. As we look at gold, 70% probability in our estimation that gold will go up. So going long gold, we see gold is right now, as the market closed, at 268.25. And as we look at the support, there's around 264.51. We look at resistance, 273.40. We look at the aggressive entry point, 268.40. Strict entry, 269.51. And as we look at the expected move, $5 to $7. And of course, the backtest accuracy on gold is 70% for the aggressive. 75% for the aggressive, 80% for the strict. And that is our backtest accuracy on has this kind of pattern where we see things, has it worked in the past? And we found that as we go back about a year, that we do find that it has worked that percentage of the time. So again, look to potentially go long on gold. And again, the strict entry point is going to be 269.51. So keep an eye on things. The aggressive is, if indeed it cuts back, pulls back to 268.40. So that 268.40, 269.51. That is where we are. Lastly, we will move on to Bitcoin, HODL. That is the Bitcoin ETF that is managed by VanEck. And as we look at it, you can see how tight it is, 23.27. So about 5 cents, up 4 cents apart on the buy and sell. This is just after hours. So again, shows the liquidity of what's going on there. Down for the day, 1.52%. Now, again, this is not anything I would be banking on at all. We've got about a 50% probability of it going short. What does that mean? It's likely to go short as long. What am I going to do? Nothing in that regard. I'll tell you, the support is at 23.19. Resistance is at 27.22. Currently, as the market closed, we saw HODL at 25.21. And as we look at the strict entry point, it would be 25.86. That is the strict entry point. The aggressive is 25.21, which is right where it is as the market closed. And as we back test it, it's 55% for the aggressive, 60% for the strict. Not anything I'd be pulling the trigger on again. I like the odds when they're up there around the 80 percentile. That makes me feel the best. If I've got a probability of 80% and I've got a back test of 80% or more, man, that is one I'm going to be looking in every way possible to pull the trigger on. We don't have one of those setting up for you right now. But again, with gold, we've got a 70% long possibility according to our estimations. And on that strict entry point, about an 80% of accuracy on the back test. So again, not giving you market information, asking you to listen to this, practice it, see if you understand what you're seeing. And again, keep up with your trades. If you don't have a copy of our daily market worksheet, and that is our trade worksheet and our weekly market worksheet, you need those because they teach you by filling those things out and helping you understand what's going on in the market. Every time you do a trade, my friends, you need to be jotting down what it is you were thinking when you entered and what you're thinking throughout the course of the trade. As you check the markets and you make your decisions, you will learn so much from that. And in fact, many times we learn more from the bad trades that we do than from the good ones, because if the market just goes in your direction and you guessed wrong, but it just went that way anyway and you think you're a genius, that's what happens to people who jump in when the market is just tracking up for weeks at a time and all of a sudden think they're a genius until, the bottom falls out. Then they realize they got no idea what they're doing, and then it's too late because the market will many times claw back everything it took from you or it gave you. It'll claw back everything it gave you and take even more. God bless, my friends. All the best from the whole team at Charting Wealth.